Hello? 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 Hello students, am I audible? Hello? Yes, it's coming now. Okay, all set students. Good morning to everyone. Today and tomorrow we are taking 2 days live classes for our CA Foundation Accounting. Hope you have exam on 15th of this month, afternoon session. So I am here to help you till you complete your CA Foundation Accounting exam. Okay students, but today and tomorrow we are taking live classes. On 15th I am available on Telegram. If you have any doubts, you can post in our Telegram channel so that I will try to respond. Okay, now it is 10 o'clock, 10 to 12 we take class, and again evening we have another session from 7 to 11 p.m. Okay students, yes. Now look at here, I have categorized the whole accounting syllabus in 4 categories. I mean 5 categories: A, B, C, D and E. Sir, category A chapters consist of accounting for GST, bills of exchange, bank reconciliation statement, inventories, capital and revenue expenditure, depreciation and rectification of errors. On these chapters already we have marathon in our channel, you can go and watch. These 7 chapters consist of weightage of 36 marks covered in June 2024, September 45 marks, January 32 marks. So on average you get 30 marks from these 7 chapters, and these 7 chapters and category C and category D chapters, right? Category B chapters consist of final accounts of sole proprietorship and financial statements of not-for-profit organizations and accounts from incomplete records. Financial statements of sole proprietorship consist again non-manufacturing entities and manufacturing entities. In this time 10 to 12 o'clock we try to cover final accounts of manufacturing and non-manufacturing entities, at the same time incomplete records. Is it clear? Next, from these chapters regularly they are asking minimum to minimum 25 marks, including true or false statements. Is it clear? So if you can score from category A and category B minimum to minimum 40 to 50 marks, now 40, at least 40. If you can try to score from category A and category B minimum 40 marks, now you can easily score from category C, D and E remaining 10 to 20 marks, so that you get minimum 60 marks. So try to maximum utilize these 2 days, 13th and 14th. Here we cover concepts plus important study material problems, RTP for May 2025, MTP 2 series 1 and series 2, MTP for May 2025, and some additional questions from previous attempts. Maximum how much possible I will cover. Clear? Now look at category C. The whole partnership and LLP accounts consist. Partnership accounts consist of 6 chapters, students. 6 chapters at 6 units. From this partnership, regularly they are asking minimum to minimum 22 marks. 22 marks. Okay. Next, category D consists of company accounts. Company accounts consist of 5 units. From company accounts, regularly they are testing minimum to minimum 22 marks, maximum 25 marks. Hope you are following. Next, category E consists of other chapters like theoretical framework, journal, ledger, subsidiary books, like that. Previously, they are asking in January 2025 attempt, they have asked for 21 marks. Is it clear? Right. So subsidiary books, ledger, journal, you need not to do separate practice, because these are basic chapters with the limited with the knowledge which you have on these chapters. If they ask any question, you can comfortably ask. Sorry, you can comfortably write. Clear? Now here, observe carefully what are the types of problems they are asking in the examination from all these chapters. I have drafted what are the various types of problems they are asking. Types of problems they are asking from various chapters. Okay, now look at this is the weightage given by ICAI. From these 3 chapters, regularly they are asking 15% to 25%. Regularly they are asking. Okay, now look at. First, we start our discussion with the final accounts of sole proprietorship. What are the various types of problems they are asking? Look at. If you take non-manufacturing entities, first and foremost important type of problem is preparation of trading and profit and loss account and balance sheet with adjustments. Compulsorily they give you minimum 6 to 7 or 8 adjustments, so that you have to prepare trading and profit and loss account. If they want to test on student for to the student for 5 marks or 4 marks question, they may ask opening entry, or we have some problems on missing amounts, computation of missing amounts. They give you trading and profit and loss account, and they give you the missing amounts. We have to calculate. This type of problem you may get for 5 marks. Next, calculation of revised net profit. Means already they calculated net profit and they give you some rectification. Now we have to prepare profit and loss account again. After that we have to prepare balance sheet. These many problems, these many types of problems they are asking in the examination from non-manufacturing entities. Now from manufacturing entities, what type of problem they may ask? They may ask only on the concept of manufacturing. Sorry, it is not manufacturing entities, it is manufacturing account. They may ask only on the concept of manufacturing account. Clear? After that they may ask the full problem in the sense manufacturing account, trading account and profit and loss account and balance sheet. They may ask in any manner. But what we have to do, what is in our hand? In our hand we have only preparation. And the beauty of accounting subject is it is stepwise marking. You get stepwise marking now. Whatever the answer you can write, you will write and come. To the extent possible, you write and come. Result, give it to the ICAI. Okay, you get stepwise marking. Now, without wasting much time, we enter into the final accounts chapter. In the final accounts chapter, the main requirement is preparation of trading account, profit and loss account and balance sheet. These are the financial statements of sole proprietorship. Yes sir. By preparing trading account, what we can calculate? Gross profit or gross loss. That gross profit or gross loss is transferred to the profit and loss account. In the profit and loss account, we can calculate net profit or net loss. That is transferred to the capital account. Finally, the capital account balance is shown on the liability side of balance sheet. Now the balance sheet is tallied. A student get more difficulty when he will when the balance sheet is not getting tallied. Why? Because trading account we balance, profit and loss account we balance, but when it comes to balance sheet now, it gets automatically tallied. That's why most of the students they feel difficulty at the time of totaling the balance sheet. Right? To avoid all those confusions, what is the approach we have to follow? Now we discuss some problems. Now you follow the same approach in the examination, so that you will not face any difficulty. Right? For that I am taking, first we try to revise adjustments quickly. What are the various adjustments they give you to the trial balance? The first and foremost adjustment is closing stock. The first and foremost adjustment is closing stock. If closing stock is given, then immediately show it on the credit side of trading account and asset side of balance sheet. If it is given in the trial balance itself, show it directly on the asset side of balance sheet. Next, outstanding expenses. These are the expenses which are due, accrued at the end of the year but not yet paid. If it is given outside the trial balance, then what is the adjustment? Add concerned expense, this outstanding amount, add to the concerned item and show it on the debit side of trading account or profit and loss account. Again, it is a liability. Now, outstanding expense is a liability, so show it on the liability side of balance sheet again. Next, another adjustment is prepaid expenses, means expenses relating to the next year but paid in the current year itself. So what is the accounting treatment? This prepaid expense we should not show on the in the current year financial statements. So that this must be excluded from the expense. Expenses generally we show on the debit side of trading account or debit side of P&L account. Deduct this prepaid expense from the concerned expense already paid and again show it on the liability side of asset side of balance sheet. If it is given directly in the trial balance, then directly take it to the asset side of balance sheet. Next, incomes outstanding. Income outstanding means income earned during the year and accrued also but not yet received. Now what we have to do, this must be added to the income already received in the credit side of trading account and again we show on the asset side of balance sheet. If it is directly given in the trial balance, then we show on the asset side of balance sheet. Okay. Next, incomes received in advance means incomes relating to the next year but received in the current year itself. It should not show, we should not show it as current year income. So that what we do, already from the income received we deduct. This income received in advance we deduct and it is shown on the liability side of balance sheet again. If it is given in the trial balance itself, then show it directly on the liability side of balance sheet. Next one, bad debts. Bad debt is loss for us. So these bad debts given in the trial balance, directly take it to the P&L account. Given in the trial balance, directly take it to the P&L account debit side. If it is given outside the trial balance, then first we have to deduct these bad debts from debtors. Again, this is shown to the P&L account debit side. First what we have to do, deduct from debtors. Debtors are shown on the asset side of balance sheet. Yes sir, deduct from debtors. And again, it's a liability. So add to the bad debts already incurred in the P&L account. Okay, next one. Provision for bad and doubtful debts. This is very, very important, student. So when the provision for doubtful debts is given in the trial balance, now immediately you prepare provision for doubtful debts account. Provision for doubtful debts account you prepare. When it comes to a problem, I will explain. Okay. Next, if it is given directly, if it is not given in the trial balance, now then what is accounting? You need not to prepare account. You need not to prepare account. Directly this provision you transfer to the P&L account. If it is given in the trial balance, then you prepare a working note separately. How do we calculate provision? That we see in one problem. Next, provision for discount on debtors also. This is also after providing provision for doubtful debts, then only we can calculate provision for discount on debtors. Right? If it is given in the trial balance now, then it is better to prepare provision for discount on debtors account separately. If it is given only in the adjustment now, then directly you take this provision to the P&L account debit side. Next one, depreciation. Depreciation, already in the depreciation chapter you have learned that. Okay, so here directly we calculate depreciation on the fixed asset. This particular depreciation is deducted from the concerned asset and again it is shown on the debit side of P&L account. If depreciation is given directly in the trial balance, then take it to the P&L account straight away. Next, interest on capital. Interest on capital generally they give you outside the trial balance. Then what is the adjustment treatment for this? So immediately add this interest on capital to the capital on the liability side of balance sheet. Again, take it to the P&L account debit side. Next, interest on drawings. These are notional interest and notional interest on drawings. Actually, the proprietor will not pay any cash in drawings, any cash for interest. At the same time, the business will not pay any cash to a proprietor in the form of interest. Simply they will add to the capital. Interest on drawings is deducted from capital. Interest on drawings are deducted from capital on the liability side of balance sheet. Again, it is shown on the credit side of P&L account. Next, loss by fire. Very, very important adjustments. Loss by fire. Loss by fire, if it is given in the trial balance itself, then take it to the P&L account directly. If it is given outside the trial balance, first measure the loss amount. Next, first credit this to the trading account. After that, check whether the goods are insured or not. If the goods are not insured totally, then total loss is taken to the P&L account debit side. If the goods are insured, then check how much of insurance claim accepted by the insurance company. If the insurance company accepted total claim, then take it to the balance sheet asset side. If insurance company, let us say for example, goods lost 10,000 rupees. First we credit this 10,000 to trading account. After that, suppose goods are not insured. not insured, then total 10,000 is taken to the P&L account. If goods are insured, then insurance company accepted goods are insured, insurance company accepted total claim, then take it to the balance sheet asset side. Insurance company accepted part claim in the sense, let us assume 5,000. Part claim 5,000. 5,000 is shown on the asset side of balance sheet and remaining 5,000 is lost P&L account debit side. Is it clear? Right. Next, goods withdrawn by for personal use. If it is given outside the trial balance, then what we have to do? Simply add to the drawings first. Because of this drawings increases, na? Yes sir, add to the drawings. And because of this, what is the entry we record normally? Drawings account debit to purchases. So add this amount to drawings, at the same time deduct this amount from purchases in the trading account debit side. If it is given in the trial balance itself, then directly credit to the trading account. Okay, or you can deduct this from purchases on the debit side. Next, goods distributed as free samples. Generally all these adjustments, they give you 99% they give you outside the trial balance. 99% they give you outside the trial balance. Is it clear? Goods distributed as free samples. Normally what is the entry we record for this? Advertisement expense account debit to purchases account. What is the effect on financial statements? From purchases you deduct these goods distributed as free samples. Again, because of this advertisement expense increases, now advertisement expense is shown on the debit side of P&L account. If already advertisement expense is there, add these goods distributed as free samples. Otherwise you can directly show it goods distributed. Next, sale of goods on approval basis. On approval basis, this we discuss later. When the concept comes, then we discuss, because we need little bit time to discuss this. Till now, whatever the adjustments we have discussed, on this we try to solve some problems. Okay, now look at problem number 10. Everybody, hope you are following. If you are following, just type yes sir, we are following. Okay, look at, and don't forget to like the video. Okay, right, first one, Mr. Mohan gives you the following trial balance and some other information. The following trial balance, this is a trial balance. When it is a trial balance, you check that both sides are equal. Okay, right, first item. Now what we have to do? Read one by one item and identify in which statement it is recorded. Means whether it is recorded in trading account or P&L account or balance sheet. Okay, observe carefully. Look at first one, capital. Capital is shown on the liability side of balance sheet. Yes sir. Sales shown on the credit side of trading account. Purchases, debit side of trading account. Opening inventory, debit side of trading account. Freight inward, it is freight inward, student. So it is paid on purchase of goods. Whatever the expense we paid on purchase of goods, it is shown on the debit side of trading account. Next, salaries, debit side of P&L account. Other administration expenses, it is shown on the debit side of P&L account. Next, furniture is asset, balance sheet asset side. Trade receivables and trade payables. Trade receivables are shown on the asset side of balance sheet. Trade payables are shown on the liability side of balance sheet. Next, returns. Debit balance of returns, what? Sales returns. Sales returns are deducted from sales. At the same time, 12,000 are deducted from purchases. Purchase returns, credit balance. No? Yes. Next, discount. Discount debit balance is given, means discount allowed. Credit balance, discount received. Discount allowed is shown on the debit side of P&L account. Discount received is shown on the credit side of P&L account. Next one, bad debts. Here bad debts are given in the trial balance, so that straight away take it to the profit and loss account. But check before transferring bad debts to the profit and loss account, check do you have any provision for doubtful debts or not. But in this entire problem there is no provision for doubtful debts, so that these bad debts are directly taken to the debit side of P&L account. Next, investments in government securities. Investments in government securities is asset for us, so this is shown on the asset side of balance sheet. Next, cash in hand and cash at bank. This is asset shown on the asset side of balance sheet. Next, in this problem the important point is this GST adjustment. In this entire problem the important point is GST adjustment. Here you can observe input GST they have given and output CGST, SGST, IGST is given. So here you have to apply the GST set of provisions. How can we apply the GST set of provision? Observe carefully. Input CGST, first we have to adjust against output CGST. Input CGST is 10,000, output CGST is 8,000. So how much we have plus? we have plus 2000 rupees. After adjusting 8000 rupees, we have plus amount 2000 rupees. Next, input SGST is adjusted against output SGST. Input SGST is how much? 10,000. Output SGST is how much? 8,000. So we have plus 2,000 rupees input SGST. And output IGST liability is how much? 6,000. Output IGST liability is how much? 6,000. But we have this output IGST can be adjusted against input CGST and input SGST. So 6,000 is output IGST liability and 2,000 input CGST we have na adjust. So how much amount we have to pay? We have to pay more 2,000 rupees to the government. After doing all this adjustment, this 2,000 rupees we have to show as liability. This 2,000 rupees we have to show in the balance sheet as a liability. Why? Because output IGST payable. If you assume that this output IGST is paid, sir, yes, then what is the entry we record? Output IGST account debit to cash or bank account. In that case, output IGST liability decreases. At the same time, cash balance also decreases. How much cash balance we have here? 1,89,000. If you assume this output IGST is paid, then do one thing, output IGST paid na, it is not shown in the balance sheet again, and cash balance automatically decrease by how much? 2,000. It depends on your assumption. It depends on your assumption. Is it clear? Next. Closing inventory straight away shown on the credit side of trading account and again balance sheet asset side. Depreciation on furniture. Here furniture is how much? Furniture they have given 3.5 lakh na. So on 3.5 lakh we provide 10% depreciation. 35,000 depreciation shown on the debit side of P&L account, and again this 35,000 depreciation is deducted from furniture on the asset side of balance sheet. Is it clear, students? Yes, sir. So now the only pending is drafting the accounts. Till now whatever I have explained you can find. But do one thing, first draw all the required formats. Draw all the required formats. First one trading account, after that profit and loss account, after that balance sheet. First draw all the required formats. After drawing all the required formats, start the problem from beginning. From capital to output IGST, write one by one. Suppose capital is shown on the liability side of balance sheet. First write down the capital. Write down the capital. Next, sales shown on the credit side of trading account. Go to trading account credit side and write down. If you can solve the problem like this, you will not leave even one item. At the same time, the time you get is more than sufficient. There are some people, students, first they will try to complete trading account, after that they will try to complete profit and loss account, after that they will try to complete balance sheet. If they do like this, they will not get time to complete the entire question paper. Do remember. Don't forget the rule. Total time allowed is 180 minutes and total marks you have to attempt 100 marks, so that you have to spend 1.8 minute per mark. 1.8 minute per mark. Don't forget this rule. Means suppose if the final accounts problem is for 10 marks, you have to attempt it within 18 minutes, not more than that. If you attempt more than this, that means you are losing the time to attempt the next question. Hope you guys are following. Yes. Now look at the next problem. So here working note is given, you can observe for adjusting output GST. Next look at problem number 12. Problem number 12. So here I am discussing all important problems, right? First, the following is the schedule of balances on 31st March 2022 extracted from the books of Sri Gavaskar, who carries on business under the same name and style of Messrs. Gavaskar, Vishwanath and Co. This is very, very important problem. And don't expect the same copy paste style of problem. No. Suppose in this problem, it has some 6 adjustments. Observe carefully. This problem has 6 adjustments. These adjustments may be changed, or they may add one or more adjustments, or they may eliminate one or more adjustments from this problem, or they may change some items in the problem. But how the problem gives, forget about it. But try to understand the process of completing or solving the problem. However the problem on final accounts, whatever it may be, but try to understand or try to focus on how the process, how this problem is solved. How this problem is solved. You have to focus on that. Right. Now look at first item. Start from the beginning. Here what is the requirement? Tell me. We have to prepare all the final accounts. We have to prepare all the final accounts, trading and profit and loss account and balance sheet, final accounts. Now what we have to do? Draw all the required formats, trading account, profit and loss account and balance sheet. Draw all the required formats, trading account, profit and loss account and balance sheet. Right, now start from the beginning. Cash in hand. Cash in hand directly shown on the asset side of balance sheet. Cash at bank, asset side of balance sheet. Sundry debtors. Sundry debtors make a star mark. Why? Because there are some adjustments which affect the sundry debtors, like further bad debts and provision for doubtful debts. At the same time, provision for discount on debtors. These type of adjustments will affect sundry debtors. That's why make a star mark on that. Next, stock on 1/4/2021. Stock on 1/4/2021 is the opening stock. Show it on the debit side of trading account. Furniture and fixtures, asset, balance sheet, asset side. Check any depreciation is there. Okay, next one. Office equipment, again asset. Building, asset, balance sheet. Motor car, asset, balance sheet, asset side. Next, sundry creditors. Sundry creditors is liability, balance sheet, liability side. Directly show it. If there is no requirement of any adjustment, then directly this amount is shown on the liability side of balance sheet or asset side of balance sheet or P&L account or trading account. If any particular item has adjustment, then you have to stop and do the adjustment, inner column. If there are no adjustment for any particular item, straight away take it to the concerned account, means trading account or P&L account or balance sheet. Okay students, next one. Loan from Vishwanath. It's a liability, balance sheet, liability side. Next, provision for bad debts. I said immediately prepare provision for bad debts account. Immediately prepare provision for bad debts account. Observe here. Provision for bad debts account. Immediately. It shows credit balance now. Show it on the credit side as opening balance. By balance be waiting. By balance be waiting. Next one. Purchases, trading account debit. Because most of the items you know. Okay. Next, purchase returns. Deduct from purchases. Sales. Show it on the credit side of trading account. Sales returns. Debit from means deduct from sales. Next, salaries. P&L account debit. Rent for go down. P&L account debit. Interest on loan from Vishwanath. P&L account debit. Rates and taxes. P&L account debit. Discount allowed to debtors. P&L account debit. Discount received from creditors. P&L account credit. Next, freight on purchases. Very important. Don't forget. This is shown on the trading account debit side. Clear? Because it is the expense relating to purchases. Next, carriage outward. See, carriage outward means what? Carriage amount paid on sale of goods, or to distribute or to deliver the goods, we have paid these amounts. It is relating to sales now, so it is shown on the debit side of P&L account, whereas freight on purchases is shown on the debit side of trading account. Clear? Next, drawings. Drawings are deducted from capital, right sir? Printing and stationery, P&L account debit. Electricity charges, P&L account debit. Insurance premium, P&L account debit. If there are no adjustments for all these items, straight away take it to the trading account or P&L account or balance sheet. Don't forget. Next, general office expenses, P&L account debit. Bad debts, P&L account debit. But here we have provision for doubtful debts. Now, when we are maintaining provision for doubtful debts from the last year, then it is better not to transfer these bad debts to the P&L account. Generally, bad debts are transferred to the P&L account, but when provision is maintained, when we have opening provision, then bad debts are not transferred to the P&L account. Instead of that, transfer bad debts to provision for doubtful debts. Normally, what is the entry for transferring bad debts to P&L account? P&L account debit to bad debts account. But here bad debts are transferred to provision account. Then what is the entry we got? Provision for doubtful debts account debit to bad debts account. So if you see the provision for doubtful debts account, it is debited na to bad debts 20,000. Is it clear, students? Yes sir, yes sir. Next one, bank charges. Bank charges are expense, P&L account debit. Motor car expenses, expense, P&L account debit. Capital shown on the liability side of balance sheet. With this, all the items shown in the balance sheet are taken to the trading or P&L or balance sheet. Sorry, trading trial balance are taken to the trading P&L and balance sheet. Now look at the adjustments one by one. Anybody with minimal knowledge, they can write the items from trial balance to trading account or P&L account or in the balance sheet in the appropriate place, because already you have completed coaching, already, or sometimes you have revised everything. So with the knowledge which you have, you can take the items from trial balance to trading account or P&L account or balance sheet quickly. Why? Because here we have to draw the format. This problem you have to solve within 15 minutes. In this 15 minutes, what you have to do? You have to read the problem, you have to draw the formats, and you have to write all the one by one items without getting any mistake. Right? Now, final accounts problem lies in adjustments. If you can do the adjustments perfectly, then you get the right answer. Now look at the first adjustment is depreciation. First adjustment is depreciation. What they are asking? Building is used for business, 5%. Here we have building 6 lakhs now. 6 lakhs into 5%, 30,000. 30,000 from building you deduct, and the same 30,000 is shown on the asset P&L account debit side as depreciation. Next one, furniture and fixtures by 10%. What is the depreciation rate on furniture and fixtures? 10%. Observe carefully here. Here we have furniture and fixtures. How much? 2,14,000. But we have important adjustment for this. Look at one steel table. Steel table also comes under furniture. Purchased during the year for 14,000 was sold for the same price, but the sale proceeds were wrongly credited to sales account. Normally for purchase of furniture, what is the entry we record? Cash or bank account debit to furniture account. But here by mistake they have written the entry as cash or bank account debit to sales account. Means here there is a rectification. What is the rectification? The sale of furniture is included in sales account na? Means how much is sales total? Sales total are 23 lakhs. From this 23 lakhs, first you deduct 14,000. From this 23 lakhs, first you deduct 14,000. So sales are eliminated. Now, what is the furniture value? Tell me. Furniture value is 2,14,000. Furniture value is 2,14,000, but we sold 14,000 worth of furniture. What is the remaining furniture? 2 lakhs. On this 2 lakhs, now you calculate depreciation, 10%. 2 lakhs into 10%, 20,000. This is the important adjustment. This 20,000 is shown on the debit side of P&L account. In that case, total how much furniture we show on the asset side of balance sheet? 2 lakhs minus 20,000, 1,80,000. Right? Next one. Office equipment by 15%. Office equipment, what is the rate of depreciation of office equipment? 15%. In this entire problem now, first adjustment is very, very important. Okay, office equipment 15%. But there is an adjustment. Look at typewriter during the, we have purchased a typewriter. Purchase of a typewriter during the year 40,000 has been wrongly debited to purchases account. What is the entry we have to write at the time of purchase of typewriter? Typewriter comes under office equipment. Typewriter comes under office equipment. Then what is the entry we have to write? Office equipment account debit to cash or bank account. But it is wrongly debited to purchases account. In that case, what is the entry we have to write? Now we have to eliminate this 40,000 from purchases. How much purchases given? Purchases are given 14 lakhs. Now we have to deduct 40,000 rupees from purchases. Okay, and office equipment is given 1,60,000. To this 1,60,000 we add 40,000. Now total office equipment becomes 2 lakhs. On this 2 lakhs provide 15% depreciation, 30,000. So 30,000 deduct from office equipment. Net amount 1,70,000 shown on the asset side of balance sheet. And this office equipment 30,000 depreciation, show it on the debit side of P&L account. Next one. And last one, motor car by 20%. Here what is the motor car amount? 2 lakhs. Motor car 2 lakhs. On this 2 lakhs we have to provide 20% depreciation, 40,000. 40,000 shown on the P&L account debit side, and in the balance sheet from 2 lakhs you deduct 40,000 depreciation and show 1,60,000. Clear everybody? Yes sir. This is the first important adjustment. Here, next one. Value of stock close of the year. Closing stock 4,40,000. In every problem almost we get this closing stock 4,40,000. Not 4,40,000 closing stock. So it is shown on the credit side of trading account, balance sheet, asset side. Next, 2 months rent for godown is outstanding. 2 months rent for godown is outstanding. Generally, in the current year, total we have to pay 12 months rent. Whether paid or payable, we have to show 12 months rent. Okay. Now, they said 2 months rent is outstanding. Means, whatever the rent they have given in the problem, rent for godown, this is for how many months? This is for 10 months. Observe carefully. Means, what is per month rent? 5,500, sir. How many months rent is outstanding? 2 months, sir. 5,500 into 2 months. then it becomes 11,000. And this 11,000 is outstanding rent. 11,000 is outstanding rent. And this amount is added to 55,000. Then total expense becomes 66,000. 66,000. 11,000 outstanding na. Show it on the liability side of balance sheet. Next. Interest on loan from Vishwanath is payable at 12% per annum. This loan was taken on 1/5/2021. If you observe how much loan we have taken from Vishwanath, 3 lakhs. We have taken loan from Vishwanath 3 lakhs. What is the rate of interest? They said 12%. And the loan is taken on 1/5/2021. And we have to pay interest up to 31st March 2022. How many months total? 11 months. From 1st May 21 to 31st March 2022, total 11 months. 11 months means 11 by 12. So calculate interest. 3 lakhs into 12% into 11 by 12. Total it comes to 33,000. So up to 31st March, how much interest we have to pay to Vishwanath? 33,000. But how much interest they paid? 27,000. 27,000. Still we have to pay 6,000 rupees interest. In the P&L account, total 33,000 is shown as expense. And in the balance sheet, on the balance sheet liability side, 6,000 rupees is shown as liability. Outstanding interest. Outstanding interest. Okay. Next one. Provision for bad debts is to be maintained at 5% on sundry debtors. Here, sundry debtors, how can we calculate provision? Look at how much debtors is given. How much debtors is given? 8,60,000. 8,60,000 is shown on the asset side of balance sheet. On the asset side of balance sheet, 8,60,000. No further bad debts now. Straight away calculate provision 5%. So 8,60,000 into 5%, that comes to 43,000 provision. 8,17,000 rupees sundry debtors. Now this 43,000 is the closing provision. This 43,000 is the closing provision. Means this amount we have to carry to the next year in the form of provision for doubtful debts. Okay. Now if you go to provision for doubtful debts account, this 43,000 becomes the closing balance. This 43,000 becomes the closing balance. This you can write it as to balance C by D. If you balance this provision for doubtful debts account, debit side 63,000 minus debit side 63 minus credit 30. Remaining amount we need 33,000. This 33,000 is taken to the profit and loss account. Most of the students they get confusion here. To avoid all those confusion, follow simple trick. Generally, how much amount you transfer to P&L account? Simple. Sir, bad debts 20,000, sir. Bad debts are taken to the P&L account. Yes, sir. Sir, 43,000 we have to maintain provision for the current year, sir. Okay, fine. Total how much amount you take it to the P&L account? So generally we take it to the P&L account 63,000, sir. Okay. But already how much provision you are maintaining since last year? 30,000. Means you need total 63,000 to cover bad debts and the provision. But already how much amount you are maintaining? 30,000. So how much amount you need more? Sir, I need more 33,000, sir. So take this 33,000 to the P&L account. Means here provision, creation of provision is different from transferring amount to provision. This is what you have to understand. How much provision we created? 43,000 on the current year debtors. But how much amount we transfer to the P&L account? Only 33,000. 43,000 provision is created, but how much amount transferred to the P&L account? 33. Why? Because already we have opening provision. If you don't have any opening provision, then how much amount we transfer to the P&L account? 63,000. Why, sir? Bad debts 20, provision 43. This is very, very important, students. Here, next one. Next one, observe. This is another important adjustment in this problem. Insurance premium include 40,000 paid towards proprietor's life insurance. Generally, total insurance premium paid how much? Total insurance premium paid how much? 15,000, sir. Out of 15,000, they said 40,000 is for proprietor's life insurance. This is treated as drawings, and this 40,000 is deducted from capital in the balance sheet. Next, how much is insurance premium now? 15,000. This is the expense relating to business. This is the expense relating to business. Next, continue. And the balance of the insurance charges cover the period from 1/4/21 to 30th 6, 2022. So you can draw the timeline. Observe this timeline once. Insurance premium covers from 1/4/21 to 30th 6 2022. Total how much period covered? 15 months. Total covered 15 months. But what we are doing, we are closing the books of accounts on 31st March 2022. Means insurance premium total paid 15 months, it is covered 15 months, but we have to show in the current year P&L account from 1/4/2021 to 31/3/2022. How many months? 12 months, sir. Means what is prepaid insurance? Sir, prepaid insurance is 3 months, sir. Means out of 15 months, 12 months insurance is shown on the debit side of P&L account. Remaining 3 months insurance is shown as an asset in the balance sheet. 15,000 na total. Per month insurance how much? Sir, 15,000 divided by 15, sir. 1 month. Sorry, 1,000. 1,000 is the insurance per month. Into 12 months. Total 12,000 is shown on the debit side of P&L account. And remaining 3,000 na, 1,000 into 3. 3,000 is shown on the asset side of balance sheet. That's it. That's it. After completion of this, balance the trading account, you get gross profit or gross loss. This is transferred to P&L account. After that, balance P&L account, you get either net profit or net loss. This is transferred to capital. After completion of everything, you balance. Then you will get total equal. You must get total equal. Suppose if you have some time, suppose if your balance sheet is not tallied, you have some time, do one thing. Check the problem from the beginning once again. But if you don't have time, leave it. Leave it. Why? Because you have to solve other problems now. If you stick on to this problem, how can you solve other problems? So leave it. Leave it and try to solve other problems. If you get time, then come back again. If you can complete 1 minute, within 1 minute, 2 minutes now, you can check it. Otherwise, don't waste your time on solving this once again. Go to other problem and at the end of the exam, come back again if you have time. Otherwise, leave it. You get proportionate marks. Unnecessarily, if you check the problem once again from the beginning, if you try to do it, you lose time now. That's why. Okay, next problem. This is very, very important problem, students. This is very, very important problem and important adjustments. Next, and these are all working notes. These are all working notes. Insurance premium, building, interest on loan, provision for doubtful debts. Next, come to problem number. Just a minute. Next, come to problem number 1. Very, very important. Problem number 1. Just a minute. Observe carefully. This is another important problem. From the following particulars extracted from the books of Ganguly, prepare trading and profit and loss account and balance sheet as on 31st March 2022 after making necessary adjustments. The requirement is trading account, P&L account and balance sheet now. Immediately draw the formats. Immediately draw the formats. After drawing the formats, now look at the one by one. Look at the one by one. Look at Ganguly's capital. Ganguly's capital, opening capital na 1/4/2021 means opening capital. Show it on the liability side of balance sheet. Stock on 1/4/2021. Trading account debit side. Sales. Trading account credit. Sales return. Deduct from sales. Purchases. Trading account debit. Purchase returns. Deduct from purchases. Carriage invert. Show it on the debit side of trading account. Rent. P&L account debit. Salaries. P&L account debit. Sundry debtors. Yes. Make a star mark. Why? Because of provision, because of additional bad debts and because of any provision for doubtful debts or because of any provision for discount on debtors, sundry debtors amount will affect. That's why. Sundry creditors. Balance sheet liability side. Next, loan from Dena Bank. Loan from Dena Bank. If you get these type of things in the bracket now, you have to be very careful. Why? Because it is loan. In the bracket, what they are giving? 12%. What is this 12%? Interest. Rate of interest. How much loan we have taken? 1 lakh. How much loan we have taken? 1 lakh. This is shown on the liability side of balance sheet. But interest on loan, maybe we have to calculate interest on loan. That's why they have given in rate in the brackets. Next one. Interest paid. How much interest paid? 4,500. Okay. Next, printing and stationery, P&L account debit. Advertisement, P&L account debit. Interest received, P&L account credit. Cash with the Traders Bank Limited, asset now. Balance sheet, asset side. Discount received, P&L account credit. Investments. Investments are asset. Very important. at 5%. What is this 5%? Rate of interest. As on 1/4/2021. 1/4/2021 means beginning of the year. Means we have investment asset from the beginning of the year which carries 5% interest. That's the meaning of this. How much? 25,000. Next, furniture on 1/4/2021. When the dates are given or when the rate of interest are given, you have to be very, very careful. Why? Because these are all implied adjustments. 9,000. Furniture balance sheet asset. Next, discount allowed. P&L account debit. General expenses, P&L account debit. Audit fees, P&L account debit. Fire insurance premium, P&L account debit. Traveling expenses, P&L account debit. Postage and telegram, P&L account debit. Cash in hand, asset balance sheet. Deposit at, yes, again another important point. Deposit at 10% as on 1/4/2021. Debit means asset. We have deposits with bank. We have some deposits with bank which carries 10% interest. But these deposits are beginning from the beginning of the year. Means here also you should calculate interest on deposits. Here you have to calculate interest on investments. These two things are very, very important. Next, how much? 1,50,000. Balance sheet asset. This 1,50,000 is shown on the asset side of balance sheet, but interest portion we have to calculate. Any interest still receivable? Yes, if it is receivable, take it to the P&L account credit. Again, balance sheet asset. Clear? Next one, drawings. Drawings are deducted from capital in the balance sheet. Okay, fine. So most of the students, almost all students, they can take all these points to either trading account or P&L account or balance sheet. They are in a position to take all these things to either trading account or P&L account or balance sheet. But when it comes to adjustments, check whether you are in a position to complete all the adjustments. After completion of all the adjustments, our balance sheet should get tally. Now observe one by one adjustment. First one, value of stock on 31st March 2022 means closing stock. Yes sir. How much is closing stock? 3,93,000. Means this is shown on the credit side of trading account. Profit on next balance sheet asset side. But here there is a rectification. This includes, means this 3,93,000 includes goods returned by customers on 31st March 2022 to the value of 15,000 for which no entry has been passed in the books. Means they forgot to record entry for sales returns. Okay, now you record. So what is the entry we record, sir? Simple, sales returns account debit to trade receivables account or sundry debtors account. Yes sir, no students? Yes sir. Okay, after recording this entry, will the closing stock affect? No sir. Why? Already this 15,000 rupees worth of stock we have included in the closing inventory. Closing stock will not get any effect. But because of this entry, sales returns increase. Yes sir. Already how much sales returns we have? 43,000. Add more 15,000 rupees. Add more 15,000. So 58,000 total sales returns. Next, here trade receivables decreased now. Yes sir. How much trade receivables we have? Sundry debtors 1,20,000. From 1,20,000 you deduct 15,000. From 1,20,000 you deduct 15,000. Now the trade receivables becomes, or sundry debtors becomes 1,05,000. Hope you are following. Yes sir. So this is how we rectify. We do the first adjustment. Second adjustment, observe. Purchases include furniture purchased on 1st January 2022 for 10,000. Means total how much purchases we have? 12,15,000. 12,15,000. But they said purchases 10,000 included. Do one thing, minus 10,000. From purchases you deduct 10,000 rupees. Then your total purchases becomes 12,05,500. Okay. Now what we have to do? This is the furniture which we have purchased from 1st January 2022. But already we have some furniture in our books now. Already we have some furniture in our books. Yes sir. This furniture, this 9,000 rupees is furniture is there in the books from the beginning of the year. So that calculate depreciation for full year. Calculate depreciation for full year. 9,000 into how much percentage they said? Depreciation. Yes, depreciation observe next 10%. So second point and third point interrelated, observe. Because we have to calculate depreciation on the furniture. Already we have 9,000 rupees opening furniture. Yes sir. On 9,000 rupees you calculate 10%, comes 900. Next, this furniture, additional furniture of 10,000 is purchased from 1st January na. So depreciation is calculated from 1st January 2022 to 31st March 2022, 3 months. So 10,000 into 10% into 3 by 12. How much it comes? 250. Then what is total depreciation? 1150. 1150. This is important point. Second and third adjustments. Right. Next, fourth one, observe the loan account of Dena Bank. See, we have loan from Dena Bank now. How much loan we have? 1 lakh. How much loan we have? 1 lakh. Okay. And this loan account they are giving. Nothing but ledger account. Ledger account. Loan from bank account. Look at here, observe the dates. It is 1/4/2021. It is 31/3/2022. It is 31/3/2022. 1/4/2021 means beginning of the year. Beginning of the year. From the beginning of the year, how much liability we have? 50,000, sir. So on this 50,000 rupees, we have to calculate interest for 1 year. Interest for 1 year means 50,000 into, what is the rate of interest? 12%. That comes to 6,000 rupees. This much of interest I have to pay to Dena Bank. And 31/3/2022, you observe, by bank. Means we have borrowed new loan. Then only this posting comes now. What is the entry for bank loan? Bank account debit to bank loan account. Bank loan account credit. Yes, sir. On the credit side, by bank, 50,000. Yes, sir. This 50,000 rupees is loan. This 50,000 rupees loan borrowed on which date? 31/3/2022. On which date we are closing the books of account? 31/3/2022. Means you need not to calculate any interest on this 50,000. Now balance the account. Credit side total 1 lakh. Debit side 2 balance C by D 1 lakh. 1 lakh matching na loan. Closing balance 1 lakh. Means we have to calculate only interest on 50,000 rupees, not on entire 1 lakh. This you can understand only by looking at loan account. Okay. Now totally how much interest we have to pay? 6,000. But yeah, do remember till now total interest payable to Dena Bank 6,000. We see the next adjustment. Next, debtors include 20,000 due from Robert, and sundry creditors include 10,000 due to him. Means already we have how much of debtors? 1,20,000 minus adjustment for 15,000, remaining 1,05,000. Now what they are saying? We have debtors now. Debtors. This includes a person called Robert. 1,05,000 total debtors, but out of them there is one person whose name is Robert. 20,000 rupees amount due from him. Okay. And our creditors. How much creditors we have? 74,000. Total creditors we have 74,000. This creditor includes the same person, Robert. This creditor includes the same person, Robert. Mean from Robert we have to receive 20,000. To the Robert we have to pay 10,000. 10,000. What we do? We ask the Robert, hello Mr. Robert, you pay the remaining 10,000 balance. Total 20,000 is due from you, and 10,000 rupees due to you. Do one thing. You deduct 10,000 and pay me remaining 10,000 rupees. Okay, sir. Fine. In that case, what we will do, when we are showing this amount, debtors amount in the balance sheet, we deduct 10,000 straight away. Now what is the remaining amount we have? 95,000. Straight away we deduct 10,000 rupees. Remaining amount we have 95,000 debtors. And creditors also, creditors earlier 74,000, now we deduct 10,000 rupees. Why? Because you need not to pay 10,000. So in the balance sheet how much amount we show? 64,000. In the balance sheet how much amount we show? 64,000. You can check the answer later. Clear everybody? Debtors how much amount we show? 95,000. 95,000. If any provision is there, we calculate, right? This is the adjustment of fifth one. Very, very important. You may expect in the exam this adjustment, right? Next one. Interest paid. Interest paid include how much interest we have paid? Tell me. We have paid total 4,500 interest. We have paid total 4,500 interest. This includes 3,000 paid to Dena Bank. But actually, how much interest payable to Dena Bank? 6,000, sir. How much interest we have paid? 3,000, sir. Still payable how much? 3,000, sir. So this 3,000 rupees is shown on the liability side of balance sheet. Again, the same 3,000 is added to the interest already paid, 4,500. So total interest shown in the P&L account 7,500, and as a liability we show 3,000. Important. Next one. Interest received represent 1,000 from the sundry debtors. interest received. How much interest we received? Tell me. 7,250. Interest received 7,250. Out of that, 1,000 is due from sundry debtors. So remaining 6,250 for what? Due to delay on their part. Okay. The balance on investments and deposits. Remaining 6,250 received on the investments and deposits. Okay. First check how much interest receivable from investments. Sir, investments opening balance is 25,000, sir. So 25,000 into what is the rate of interest? 5%, sir. And it is from the beginning of the year, na? So we have to receive for full year. So total interest receivable 1,250. Due. Interest receivable, accrued or earned. Next. Deposits, look at deposit we have from the beginning of the year 1.5 lakh on the 10% interest, so that 15,000 we have to receive. 15,000 we have to receive, means total interest we have to receive from investments and deposits put together 16,250, but whereas they said received only 6,250, means still 10,000 receivable. This is the adjustment we have to do. Still 10,000 receivable. This is shown. So total interest shown on the credit side of P&L account is how much? From investments and deposits 16,250 plus 1,000 from debtors, total interest shown 17,250 on the credit side of P&L account. Next, how much interest is still receivable? 10,000. This 10,000 rupees is shown on the asset side of balance sheet. This is another important adjustment. Next one, 8th point. Provide for interest payable to Dena Bank and interest receivable on investments and deposits. Already we have provided. Next, 9th point. Make provision for doubtful debts at 5% on balance under sundry debtors. Okay. No provision need to be made for deposits. Okay, fine. Now, finally, how much debtors we have? 95,000. Actually, debtors given in the trial balance 1,20,000. We forgot to record sales returns, so that 15,000 deducted. Remaining debtors we have 1,05,000. On 1,05,000, from 1,05,000 deduct 10,000 towards to Robert. Remaining debtors 95,000. On this 95,000 you create provision 5%. 95,000 into 5%, 4,750. And this 4,750 is shown on the debit side of P&L account, and remaining 90,250 rupees is shown on the asset side of balance sheet. This is very, very important. It's a little bit lengthy problem, students. Lengthy problem. Is it clear, everybody? Yes, sir. Next, look at another important problem. This is the missing figures problem, students. This missing figure you can try to understand. Next, yeah. Next, we go to RTP. In the RTP, there is one important problem on final accounts. Look at final accounts important problem. This type of problem is given in the June 2021 exam, I hope. May 21 or June 2021, they have given this type of problem. Okay, right, look at. Charu decided to start business of fashion garments under the name of Messrs. Bella Wear on 1st April 2023. Fine. She had a saving of about 10 lakhs. She has savings of 10 lakhs rupees. Okay. She invested 3 lakh rupee out of her savings. Means it is capital. Balance sheet, liability side. And borrowed equal amount from bank. It's a liability. Yes, sir. Again, liability, balance sheet, liability side. How much? 3 lakhs. 3 lakhs capital, 3 lakhs borrowing. Next, she purchased a commercial space for 5 lakh and further spent 1 lakh on its renovation to make it ready for business. It is nothing but asset. It is nothing but asset. Right. Nothing but building. 5 lakhs plus 1 lakh. Total 6 lakh is a building value. Asset. Show it on the asset side of balance sheet. Next. Loan and interest repaid by her in first year are as follows. How much loan borrowed total? 3 lakhs. They said loan is repaid. Observe the dates. 30th June, 30th September, 31st December, 31st March. Means quarterly she is repaying the loan. Quarterly she is repaying the loan. How much loan repaid? Look at 15,000, 15,000, 15,000, 15,000. Principal amount. Means total how much amount repaid? 60,000 principal repaid, na? Sir, 60,000 principal amount repaid, sir. Still loan outstanding is how much? 2,40,000. And show this 2,40,000 on the liability side of balance sheet. Next one. Interest she paid 9,000, 8,550, 8,100, 7,650. Add this total interest. Interest is expense, P&L account debit. Interest is expense now, P&L account debit. Total interest, interest on loan. Add the total amount, debit to the P&L account. Next one. In view of further capital requirement, she transferred 2 lakh rupee from her saving bank account to the bank account of business. Initially she invested 3 lakhs. Now further 2 lakhs she transferred from her saving account to business account. Total capital become 5 lakhs. Next, she paid security deposit of 7,000 for telephone connection. It's security deposit, treat it as asset and show it on the asset side of balance sheet. Furniture of 10,000 was purchased. Furniture asset na, balance sheet asset side. All payments were made by check. All payments were made by check means we have purchased we have purchased commercial space 5 lakh and we have spent 1 lakh rupee on its renovation, and we paid telephone charges means security deposit for telephone, and we have purchased furniture means all these are made through checks. Okay, fine. And all receipts in cash were deposited in bank. Very, very important. Whenever she is making payment, she is paying through check. Whenever she is receiving amount, by cash, and all cash were deposited in bank. Okay, next one. At the end of the year, her business showed the following result. At the end of the year, her business showed the following result. Observe. Total sales 20 lakh. 20 lakh is receipt, cash receipt. Electricity expenses paid, payment 40,000, P&L account debit. Total sales, trading account credit. Carriage outward, P&L account debit. Entertainment expenses, P&L account debit. Miscellaneous expenses, P&L account debit. Total purchases, trading account debit. Telephone charges, P&L account debit. Traveling expenses, P&L account debit. Maintenance expenses, P&L account debit. Electricity expenses payable. Here already electricity expenses paid 40, still payable 20. Then what is total electricity expense? 40 plus 20, 60,000 rupees P&L account debit, and 20,000 rupees still payable na, balance sheet liabilities side. Balance sheet liabilities side. Clear? Next, other information they are giving. She withdrew 5,000 by check each month for her personal expenses. Then total drawings becomes 5,000 into 12, 60,000 rupees. Total drawings becomes 60,000 rupees. Next, depreciation on building 5% per annum. How much building we have? 6 lakhs. 6 lakhs into 5%, 30,000 na? 6 lakhs into 5%, 30,000 rupees is deducted from building, and again this same 30,000 is shown on the debit side of P&L account. Next, and furniture, it is not all, and furniture 10%. How much furniture we have? Furniture we have purchased for 10,000. So 10,000 into 10%. So 1,000 rupees depreciation on furniture. Closing stock in hand 5,50,000. Trading account credit side, balance sheet asset side. Prepare trading account, profit and loss account for the year ended 31st March and balance sheet as on that date. If you observe in the entire problem, they did not give any bank balance. Any bank balance. Now what we have to do? We have to calculate bank balance. Sir, how bank balance is calculated? By preparing bank account. By preparing bank account. That is very, very important working note in the entire problem. If you can prepare bank account na, so that you will get bank balance. That bank balance is shown on the asset side of balance sheet. Then only you get the correct answer of balance sheet. Okay, sir, how I can prepare bank accounts are simple. All the receipts debit, all the payments credit. How, sir? Observe carefully. Yes, look at this type of account you have to prepare. Sir, what are the receipts for us? Yes, initially she contributed 3 lakh capital and further capital 2 lakhs. She borrowed 3 lakhs loan and she sold goods for 20 lakhs. And remaining payments, yes, all the payments you have to write down. Building purchase, for, because she started building for first time, everything she purchased, expenses paid, all those things, make a list of it. This one will get good marks for working note. Right, bank loan she repaid 60,000, bank loan repaid principal amount. Interest she paid 33,300. Security deposit, drawings, purchase, telephone. Means on one hand you have to write all these things in bank account. At the same time, on the other hand, you have to show them again in the trading and P&L account and balance sheet. Observe carefully. Very, very important. Very, very important. Is it clear, students? Yes, sir. Right. So this is another important problem from MTP. Sorry, RTP. Now look at the MTP. MTP, they have given a simple problem already we have discussed, I think. Actually, this is on manufacturing account. On manufacturing account. Now let me check MTP2. MTP2. Yes. MTP2, observe carefully. This is another important type of problem. MTP2. Look at. The following are the balances as at 31st March 2025 extracted from the books of Mr. Govin. Plant and machinery they have given. Plant and machinery balance sheet asset. Furniture and fittings balance sheet asset. Bank overdraft balance sheet liability. Capital account balance sheet liability side. Drawings deducted from capital. Purchases trading account debit. Opening stock trading account debit. Wages trading account debit side. Provision for doubtful debts, very, very important. Prepare one working note. Open ledger account and show it as a opening balance 19,300. Next, provision for discount on debtors. For this also you create one working note. Provision for discount on debtors, opening balance, by balance BYD. Next, debtors 7,20,000. Prepare one working note because debtors will directly affect with this provision for doubtful debts and discount on debtors. Next, creditors 2,85,000. Balance sheet liability set. Bad debts. When we are maintaining provision for doubtful debts, now, so bad debts are transferred to this provision for doubtful debts account. Right. Next one, bad debts recovered. Sir, bad debts are transferred to the provision for doubtful debts, na sir. So bad debts recovered also transferred to the provision for doubtful debts. No. Bad debts are transferred to the bad debts recovered or transferred to the credit side of P&L account. Next, salaries P&L account debit. Salaries payable. Salaries payable they are giving. This is added to already salaries. Salaries 1,35,300. Salaries payable 14,700 na add to the salaries. Okay. Next, after that it is shown on the liability side of balance sheet. Next, prepaid rent. Prepaid rent given and prepaid rent is given. Okay, add this 1,100 to this rent and again show it as a asset in the balance sheet. Next, carriage inward. Carriage inward balance sheet, sorry, trading account debit side. Carriage outward P&L account debit side. Sales trading account credit. Advertisement expenses P&L account debit. Printing and stationery P&L account debit. Cash in hand balance sheet asset. Cash at bank balance sheet asset. Office expenses P&L account debit. Interest paid on loan P&L account debit. Hope you are following. Next, additional information, observe carefully. Purchases include sales written of 15,450. Observe here, purchases total how much? Purchases 9,60,000. This include 15,450. This include 15,450 for sales return. Sales return are by mistake debited to the purchases account. Now what we do? We deduct from purchases. Okay, because of this sales returns will increase now. Sales returns will increase now. Earlier there are no sales returns, but now there are sales returns 15,450 deduct from sales. Means on one hand deduct from purchases, on the other hand deduct from sales. Next step. Sales include purchase return of 10,350. Now here we have sales. Sales total 12,41,800. This include 10,350 purchase returns. Okay, now you deduct. Mistake is happened na, you deduct now. Now what we have to do next? Because of this 10,350 purchase returns will increase. Yes sir, already we have purchase returns. Check any purchase returns we have. No sir. Drawings purchases. Okay, no purchase returns. Okay, now we have purchase returns na 10,350 direct from purchases. This is the first adjustment. Second adjustment, goods withdrawn by Mr. Govin for own consumption 21,000 included in purchases. What is the entry we record? Drawings account debit to purchases account. Because of this what happens? Drawings will increase, purchases decrease. Now this 21,000 is first decreases from purchases, increase drawings. Okay, next one. Drawings are ultimately deducted from capital. Next, create provision for doubtful debts 5%. Okay, provision for discount on debtors 2.5%. Very, very important adjustment in this problem. Next, free SEP that we discussed. Free samples distributed for publicity costing 4,950. What is the entry we record? Advertisement expense account debit to purchases account. So purchases account balance decrease na, go to trading account, decrease from purchases. Advertisement expense increase na, yes sir. Already we have advertisement expense here. Look at 20,150. To this 20,150 you add more 4,950. Next, wages paid in the month of April for installation of plant and machinery amounting to 2,700. Any wages paid for installation of any asset, plant and machinery, these are added to the plant and machinery cost 2,700, but were included in the wages account. What we have to do? Already we have paid wages 72,990 na, minus 2,700. Deduct and add 2,700 to plant and machinery. Because of this plant and machinery value increases na, yes sir, 1,17,300 plus 2,700. After adding 2,700, calculate depreciation. Calculate depreciation on plant and machinery 15%. Clear? Right sir. Next, depreciation on furniture and fittings 10%. Furniture and fittings how much? Furniture and fittings. Look at furniture and fittings 61,500 into 10% depreciation. Deduct depreciation from furniture and show the same depreciation on the P&L account debit side. Next, here this is another important adjustment. Another not very important adjustment. What is that? If you observe in the entire adjustments, they have not given closing inventory. They have not given closing inventory. Yes or no, students? Yes sir. Observe carefully. To calculate closing inventory, this point is given. To calculate closing inventory, this point is given. Look at, bank overdraft is secured against hypothecation of stock. Bank overdraft. We have bank overdraft now. We have bank overdraft of 4,80,000 rupees. Bank overdraft of 4,80,000 rupees. Means this overdraft, bank allowed overdraft based on the hypothecation of stock. Okay, fine. Bank overdraft outstanding as on 31st March 2025. Bank overdraft outstanding on 31st March 2025. How much? 4,80,000. 4,80,000. Yes. Has been considered as 80% of the real value of stock, deducting 20% as margin. And after adjusting the marginal value of 80% of the same has been allowed to draw as an overdraft. Most of the students, they get confusion here. Very simple, students. Observe carefully. Let us say I have given 100 rupees worth of stock to the bank. I have shown 100 rupees worth of stock to the bank. Immediately what bank is doing? Bank is deducting 20% margin. Immediately bank is deducting 20% margin. Means minus 20. The remaining amount comes to 80 rupees. At least how much overdraft bank should allow me? Bank should allow me 80 rupees overdraft. But after deducting margin, bank is allowing 80% of the same. 80% of the same means on 80, bank is allowing 80%. Means bank is allowing me 64 rupee as overdraft. If I show 100 rupees stock value, bank is straight away deducting 20% margin. Means at least how much OD bank should allow? 80. But on this 80 rupees, bank is allowing 80%. Means 60 rupees OD it is giving. If I give 100 rupees worth of stock, bank is giving me only 60 rupees worth of OD. Means for 60 rupees OD, I have given stock worth of 100. Okay, sir. Then bank has given me 4,80,000 rupees worth of OD. Then how much stock should I give to bank? Means 4,80,000 into 100 by 64. Cross multiplication. Important adjustment. 4,80,000 into 100 by 64. How much we get? 7.5 lakh. So if I give 7.5 lakh stock to the bank, bank is giving me 4,80,000. Or this we can solve in another way also. This 4,80,000 is equal to 80% now. This 4,80,000 is equal to 80% means convert it to 100%. First convert it to 100%. Yes, sir. Then this amount, whatever the amount we get in the bracket na, this amount also equal to 80% na, means 20% margin is deducted. Means after this you convert the same amount to 100%. You can do this calculation or you can do this calculation, whatever easy you feel, you can carry forward. Right or no, students? Yes. So in this entire problem, closing stock is not given, we have calculated closing stock. Here, how we have calculated closing stock? By taking the bank overdraft as a base. Now totally how much closing stock we calculated? 7,50,000. 7,50,000. You can see, if I give 7.5 lakh rupees stock, bank is straight away giving 20% margin na? So how much I will get? 7.5 lakh minus 20%. I get 6 lakhs. But bank is allowing me to take only 80%. Means how much I get? 6,40,000. Sorry, 4,80,000. 6 lakhs into 80%. 4,80,000 I am getting as bank holding. Yes. Clear? This is another important problem. That's it. So with this I am stopping the problem discussion on final accounts of sole proprietorship, non-manufacturing concern. Now I start discussing manufacturing entities. Manufacturing entities. What is the difference between manufacturing concern and non-manufacturing concern? Manufacturing concerns, they will manufacture the goods and they will sell it. But non-manufacturing concerns are, they will purchase goods from, they will purchase finished goods and they will sell them. Yes, and the only difference is, these people will convert the raw material into finished goods, and the non-manufacturer will buy the finished goods directly without changing its form. He will sell the same. Clear? And what are the financial statements prepared by the non-manufacturing entities? Trading account, profit and loss account and balance sheet. Then what are the financial statements prepared by the manufacturing entities? In addition to trading account, P&L account and balance sheet, they also prepare manufacturing account. If I ask, suppose I am a non-manufacturer, if I ask, suppose I am a dealer of computers, if you ask me, sir, what is the cost of this computer? I may show you the invoice. Okay, the computer is purchased for 50,000 rupees. Now I am selling it for 52,000 rupees. This is the cost of my purchase, 50,000. But if you ask the same question to the manufacturer, how much of cost you have incurred on manufacturing the products, because he has to manufacture now product. So what he has to do, he has to calculate total how much cost he has incurred on producing the goods. To produce the goods, he has to incur amount on various things like materials, labor and other expenses. This material can be divided into direct material, indirect material. Direct material means it is a material cost which can be directly attributed to the cost of the product, which we can identify directly with the cost of the product. Indirect material, we cannot identify how much of material we have used in manufacturing of this product. Directly it is not possible. Let us take for example, to manufacture a mobile. To manufacture a mobile, how many screens we need? Display, one display. How many batteries we need? One battery. So this one battery cost we can directly identify with the product. Suppose one battery cost to purchase for us, it is, let us take 5,000 rupees. I have manufactured 100 batteries. So 100 batteries into 500 rupees, 50,000, 5,000, 5 lakhs. And display cost is, let us say 15,000 rupees per display. I have manufactured 100 mobiles. 15,000 into 100, 1.5 lakh. No, sorry, 15 lakh. 15 lakh I have incurred on purchase of these displays. So here I can directly connect the cost of material with the product. I will give you one more example. To manufacture the car, how many tires you need? Sir, 4 tires, sir. This 4 tires cost is direct material. How many steerings we need? Sir, 1 steering, sir. This 1 steering cost is nothing but direct material. How many nuts and bolts you have used? How much of consumables oils you have used? How much of grease you have used? Sir, it is material, sir, but it is not possible to quantify, sir. So indirect material. In the manufacturing account, what we take is, direct material we take, direct labor we take. Direct labor nothing but what? The labor who are directly employed in the production. How you are paying wages to them? Are you paying piece rate or hourly rate? Calculate. So he worked for 8 hours, Per hour we are paying 800 rupees, sorry, or 50 rupees, 8 hours, 400 rupees, direct labor. And the workers who are not directly involved in the production, they are not direct labor, they are indirect labor. Is it clear? And direct expenses and indirect expenses. Okay, you can go through that. Now, in the manufacturing account, we take direct material, direct labor, direct expenses. These three we call it as prime cost. These three we call it as prime cost. After that, we take production overhead. Production overhead consists of indirect material, indirect labor, indirect expenses. After adding all these things, we get total cost of goods manufactured. Total cost of goods manufactured. But in between we get some more things. Observe carefully. What is the format of manufacturing account to look at? First, we have to calculate direct material now. We have to first calculate direct material. Yes. How much of material you consumed? Sir, I have consumed. To consume the material first, you should have the material. Yes, sir. If my business is a new business, I will purchase the material. At the end of the year, I will see how much of material left in my hand. So total purchases minus material left. This becomes raw material consumed in the production process. Yes, sir. If from the second year onwards, I will have opening inventory now. Yes, sir. Opening inventory. Again, we purchase the goods now. Yes, sir. Again, we may have some closing inventory now. Yes, sir. Do this calculation and you get raw material consumed. Next item we take direct labor. Yes, direct wages. If it is given directly in the problem, okay, otherwise you calculate. How, sir? Suppose if it is given piece rate into how many units produced, or if it is given hourly rate per hour into how many hours worked, you directly calculate. Next one, direct expenses. Yes, sir. Direct expenses. They will mention direct expenses, accordingly you take. If we add all these things, what we are getting? Prime cost. Next, what we are taking here? Production overheads or factory overheads. Production overheads or factory overheads. Observe carefully. What are these things? Indirect material, indirect labor and indirect expenses. Observe carefully. Royalty, hire charges, indirect expenses, repairs and maintenance, depreciation on plant and machinery or depreciation on factory shed. All these things comes under here. Next, factory cost. Right. At the end, what we take is opening work in progress. Sir, what is the work in progress, sir? Goods still under process. Means not yet completed. Not yet completed. During the year, what we do? First, we complete these unfinished goods. Then after, we start producing the finished goods. That's why the cost of opening inventory is also taken in the manufacturing account. After that, closing work in progress. Sir, how can I calculate closing work in progress? You need not to calculate. In the examination problem, they give you, but practically cost accountant they will calculate, cost department. Okay. Now, what about byproducts at net realizable value? During the process of production of main product, sometimes we get some sub-products. We categorize them as byproducts. For example, molasses is the byproduct in the manufacturing of sugar. At the same time, buttermilk is the byproduct in the manufacturing of butter, ghee. Here, these are byproducts, and these byproducts cost, or these byproducts we can sell separately. These byproducts we can sell separately, and it is credited to the manufacturing account. After doing all these calculations, the difference of manufacturing account is nothing but cost of production. Total cost incurred on producing the goods, and this cost of production we take it to the trading account debit side. Normally in the trading account debit side, what we show? Purchases. Because we have purchased finished goods and we are showing the cost of finished goods. But here we have produced the finished goods, we have produced the goods, and these goods cost we are taking to the trading account. From trading account as usual. From trading account as usual procedure. For cost of production we write, sales quantity we write, closing stock of finished goods. Then after we calculate gross profit, and this gross profit is taken to the P&L account. Again we calculate net profit, that is taken to the balance sheet, capital account, and the balance sheet is total. So in this chapter exclusively we learn about manufacturing account. Remaining everything is simple, right? Now look at how do we prepare manufacturing account. Look at here, illustration 2 once. Quickly, this type of problem you may get it for 4 marks or 5 marks. Clear, students? Mr. Vimal runs a factory which produces soaps. Mr. Vimal runs a factory which produces soaps. Following details were available in respect of his manufacturing activities for the year ended 31st 3 2022. Opening work in progress taken directly to the debit side, 1600 opening work in progress. Closing work in progress 12,000 units. How much? 20,000 on the credit side. Opening stock of raw material 1,70,000 opening stock of raw material. Closing inventory of raw material minus 1,90,000. Why we are using this information? To know how much of raw material consumed. Purchases 8,20,000. During the year we purchased 8,20,000. If you do this calculation, you get raw material purchased. Sorry, consumed. Next, higher charges of machine 60 per unit manufactured. Higher charges of machine 60 per unit manufactured means, is it direct expense or indirect expense? The direct expense, sir. How can you say? Because we have hired a machine for manufacturing of units and we are paying the charges for machine on each unit manufactured. When this is given like this, it is called direct expense. Now we check how many units produced, multiply with the 60 paisa. You get higher charges of machine. Next, higher charges of factory, nothing but factory rent, 2,20,000. It is indirect expense, right? Next one, direct wages contracted, 80 paisa per unit manufactured. We check how many units manufactured, multiply with 80 paisa, and 40 paisa per unit of closing work in progress. Means here they have given closing work in progress 12,000 units. So 12,000 units plus, how can we calculate? 12,000 units into 40 paisa, that comes 4,800. To this we add more wages paid, 80 paisa per unit manufactured. Next, repairs and maintenance, it is indirect expense. Units manufactured 5 lakh. Okay, so 5 lakh units into 80 paisa, how much it comes? 4 lakh. Total it comes 4 lakh, 4,800 as direct wages. And here they have given higher charges of machinery 60 paisa. 60 paisa into 5 lakh units. 60 paisa into 5 lakh units, how much? Just a minute. 3 lakhs now. 5 lakh into 60 paisa. It comes to 3 lakhs. 3 lakhs is the direct direct expense of machine. Okay, fine. Next one. Now look at the manufacturing account. Your manufacturing account looks like this. Look at opening inventory units 10,000 amount. Raw material consumed 1,70,000 opening, purchases, closing. Direct wages working note. Look at the working note. Direct wages 5 lakh into 80 paisa, 4 lakh. 12,000 units into 40 paisa, 4,800. Total 4 lakh 4,000. Next, direct expenses, higher charges of machinery. 5 lakh units into 60 paisa, 3 lakhs. Indirect expenses, higher charges of factory shed, repairs and maintenance cost. Total minus closing work in progress. The difference nothing but, see, 5 lakh unit we have produced. 5 lakh units we have produced. To produce 5 lakh units, we have incurred 19 lakh 800 rupees. And this amount is transferred to the trading account, debit side. Trading account debit side as cost of goods produced or cost of goods manufactured. Is it clear? Yes, sir. So this type of problem we may get for 4 marks or 5 marks. Next, look at illustration 3. On 31st March 2022, the trial balance of Mr. White were as follows. See here, this is a trial balance they have given. First item, stock on. Okay, what is the requirement finally? Look at. Prepare manufacturing account, trading account, profit and loss account, and balance sheet on 31st March. This time we may expect a problem from this manufacturing entities. Means preparation of manufacturing account, trading account, profit and loss account, and balance sheet. Why, sir? Because in the previous attempts they have given a question from normally non-manufacturing entities. Non-manufacturing entities. See, this is the question paper of 20th June 2024. Okay. Next, this is the question paper of yes, September. In the September attempt, they have asked a question from non-manufacturing entities. Okay. Next question paper. Yeah, this is January 2025, recently completed exam. Here also they have asked a question from non-manufacturing entities. That's why this attempt we may expect from manufacturing entities complete preparation of manufacturing account, trading account, profit and loss account and balance sheet. Okay, so focus on this. Yes, look at one by one. Same, the procedure which we have followed for manufacturing entities, sorry, non-manufacturing entities, we follow the same with the addition of manufacturing account. If you know how to prepare manufacturing account, remaining all procedure is same. So identify which item is taken to which place, means whether the particular item is taken to manufacturing account or trading account or profit and loss account or balance sheet. Try to focus. Next, first one, observe carefully. Stock on 1st April 2021, nothing but opening stock. For a manufacturing entity, the opening stock consists of raw material, opening work in progress and opening finished goods. These three consist of closing stock for a manufacturing entity. What are three things? Raw material, yes, consists of closing inventory. Work in progress also added in closing inventory. Finished goods also added in closing inventory. Okay, next. First one, observe. Raw material 21,000. Raw material is taken to the manufacturing account. Yes, sir. Work in progress also taken to the manufacturing account. Yes, sir. To opening work in progress 9,500. To raw material consumed calculation we use this 21,000. Next, finished goods. Finished goods are taken to trading account debit side, because finished goods we have to show on the debit side of trading account. Normally in the trading account we show opening stock, na? Yes, sir. To opening stock, same manner. Sundry debtors, balance sheet asset side. Check whether any provision for doubtful debts we have or not. Next, carriage on purchases. Carriage on purchases. Carriage on purchase means purchase of raw material or finished goods. Purchase of raw material. So it is considered as direct expense and it is taken to the manufacturing account. Do remember, students, manufacturing account. Next, bills receivable asset, balance sheet asset side. Wages. Wages are taken to manufacturing account. Earlier wages are taken to trading account. Why? It's a non-manufacturing entity, but here is a manufacturing entity. This we consider as direct wages and take it to the manufacturing account debit side. Salaries, P&L account debit. Telephone, postage, etc. P&L account debit. Repairs to office furniture, office expenses now, P&L account debit. Cash at bank, balance sheet asset. Furniture, balance sheet asset. Office furniture. Suppose if the furniture is used in the factory premises now, furniture asset, but depreciation on furniture. If the furniture is used in the factory premises, then depreciation on furniture is taken to manufacturing account. If it is office furniture na, used in the administrative purpose na, take it to the P&L account debit side. Repairs to plant. Repairs to plant. Plant is used in the production process. So the repairs to plant is taken to the manufacturing account. Next, purchases. Is it purchase of finished goods or raw material? Raw material, because we are manufacturing entities. Purchase of raw material, take it to the manufacturing account debit side. Plant and machinery. Plant and machinery is asset, balance sheet asset side, but the depreciation on plant and machinery is shown on the debit side of manufacturing account. Why? Because plant and machinery is used in the manufacturing process. Next, rent. Rent 6,000. Normally, if the rent is relating to office premises, then it is taken to the P&L account debit side. If the rent is relating to factory premises, then it is taken to the debit side of manufacturing account. So let us decide. If nothing is given, P&L account debit. Lighting. This is also same. If it is particularly relating to office, then it is taken to the P&L account debit. If it is relating to the factory, then manufacturing account debit. Let us decide. Next, general expenses, P&L account debit. Sundry creditors, balance sheet liability side. Bills payable, balance sheet liability side. Sale of scrap, very very important. Sale of scrap, it is taken to the manufacturing account credit side. Why, sir? Because we use the material in the manufacturing process. Yes, sir. If any scrap, suppose when we are manufacturing steel items, we get steel as a scrap now, scrap of steel. Okay, so that we can sell and we can realize some amount. Because of this sale of scrap, our cost of material gets decreased. Yes, sir. When the cost of material used in the production decreases, automatically the cost of production decreases. Yes, sir. Commission received, profit and loss account credit, provision for doubtful debts, prepare provision for doubtful debts account separately, capital account, balance sheet liability side, sales, where we show sales not in manufacturing account, trading account credit side. In the manufacturing account, we get always debit balance. Why? Because it is cost of production now. Yes, sir. Sales, trading account credit, bank overdraft, balance sheet liability side. Bank overdraft, balance sheet liability side. Fine. Now look at the one by one adjustment. The following additional information is available. Fine. Stock on 31st March. See, stock on 31st March 2022 means what? Closing stock. The stock or inventory consists of raw material, opening stock, opening work in progress, and finished goods. If these three are on the opening date, then these are called opening stock. If the same three items are on the closing date, then these are called closing stock, right? Raw material. What we do with raw material? Raw material information is used in the calculation of raw material consumed in the manufacturing account. Next, the same raw material is asset for us, closing date, closing inventory. Show it on the asset side of balance sheet. Next, finished goods. Closing stock of finished goods are shown on the credit side of trading account. Yes, sir, as usual. And again, we show it in the balance sheet liability side. Semi-finished goods, nothing but work in progress. Whatever the opening date they have given work in progress, that is opening work in progress, shown on the debit side of manufacturing account. Closing date, closing work in progress, shown on the credit side of manufacturing account. All these three shown on the balance sheet asset side as closing inventory. Next, salaries and wages unpaid for March 22 were separately respectively 900 and 2000. Here if you can observe, wages total 13,000, still payable 2000. 13 plus 2, 15,000 total wages on the debit side of manufacturing account. This 2,000 rupees liability, balance sheet liability side. Next, salaries already paid 10,000 plus still payable 900. Total salary is 10,900 shown on the debit side of P&L account. 900 we show as a liability in the balance sheet. Next, machinery is depreciated 10% and office furniture by 7.5%. This is not 71 by 12. No, 7.5% or 7.5%. Here the important thing is depreciation on machinery is taken to the manufacturing account debit side. Why? Because machinery is used in the manufacturing process, so that the depreciation is also taken to the manufacturing account. Whereas office furniture is used in the office premises, it is for administrative purpose. The depreciation on furniture is taken to the P&L account debit side. This is very important. Next, provision for doubtful debts is to be created 1% of sales. Very important. Normally, till now, wherever we have discussed about provision for doubtful debts, we have calculated provision on debtors. But here the first time they are saying provision is calculated on sales. Provision is calculated on sales. Total sales how much? Total sales are 1,67,200. So provision is 1672. 1,672 is the provision. 1%, na? Yes, sir. Next. Okay. Opening provision is how much? Opening provision. Sir, opening provision we have 1650, sir. 1650. Actually, current year provision how much you have to maintain? 1672, sir. Already how much provision you are maintaining? 1650, sir. Still you need how much? 22 rupees, sir. Transfer this to the P&L account debit side. Transfer this to the P&L account debit side, 22 rupees. But in the balance sheet, how much amount we show? Observe, debtors 24,000 total minus 1672 is the provision we show. Important. Next, office premises occupy 1/4 of total area. These two are important. Office premises occupy 1/4 total area. Means here we have paid rent, na, 6,000. This 6,000 is divided between factory and office. Office area occupied 1/4. Office area occupied 1/4 means factory area occupied 3/4. So 6,000 into 1/4, 1,500 is taken to the P&L account. Factory premises 4500 is taken to the manufacturing account. Next one, lighting. Lighting is to be charged as 2/3 to factory and 1/3 to office. So here lighting expenses, observe, 2/3 factory, 1/3 office, means 1350 into 1 by 3. 450 rupees for office. 450 rupees for office. So P&L account debit. 2/3 means 900. 900 is for factory. Manufacturing account debit. Over. This is how we solve this problem. That's it. Check the answer once again. Next, look at practical question 1. This is very simple. Mr. Pankaj runs a factory which produces motor spares of export quality. The following details were obtained about his manufacturing expenses for the year ended 31st March 2022. Look at work in progress they have given. Work in progress, opening and closing. Opening work in progress, manufacturing account debit side, opening work in progress. Closing work in progress, manufacturing account credit side, closing work in progress. Next, raw material they are giving, purchase, opening, closing, returned, indirect material. Indirect material taken to the debit side of manufacturing account. By utilizing these 4 information, we can calculate raw material consumed. Calculate raw material consumed. Purchases 12 lakh 10,000 plus opening stock 3 lakh 2,000 minus how much goods returned. I mean purchase raw material returned 18,000 minus what is closing stock 3 lakh 10,000. Total 11 lakh 84,000. 11 lakh 84,000 is the raw material consumed. Next, indirect material, manufacturing account debit side as under factory overheads or production overheads. Next, wages, direct wages, indirect production overheads. Next, direct expenses, royalty on production, it is shown as direct expense. Direct material, direct wages, direct expense, prime cost. Next, indirect things, look at repairs and maintenance, production overhead. Depreciation on factory shed, production overhead. Depreciation on plant and machinery, production overhead. Next, byproducts at selling price. Byproducts at selling price is taken to the credit side of manufacturing account. Over. Your manufacturing account gets completed. You are required to prepare manufacturing account of Mr. Pankaj for the year ended 31st March 2022. If you get this type of problems now, you can score easily. Next, look at problem number 3. Problem number 3, observe. The following is the trial balance of Mr. Pandit for the year ended 31st March 2022. They are giving trial balance. Look at the requirement of the problem. You are required to prepare manufacturing account, trading account and profit and loss account for the year ended 31st March 2022. Observe carefully. First, opening stock. Raw material is shown on the debit side of manufacturing account. Finished goods, debit side of trading account, and purchase of raw material. See, opening stock, purchase of raw material, and closing date they have given. Look at stock of finished goods at the end of the year. Here they said about finished goods only, means they are not giving information about closing raw material, closing stock of raw material or closing work in progress. That means opening stock of raw material 1.5 lakh, purchase of raw material 5 lakhs. Total 6.5 lakh is the raw material consumed during the year. Finished goods anyway, debit side of trading account. Next one, land and building, balance sheet asset. Loose tools, balance sheet asset side. Plant and machinery, balance sheet asset side. Investments, balance sheet asset. Cash in hand, cash at bank, balance sheet asset side. Furniture and fittings, bills receivable, sundry debtors, balance sheet asset side. Drawings, balance sheet liability. Salaries, P&L account debit. Coal and fuel, important, manufacturing account. Manufacturing account. Factory rent, manufacturing account. General expenses, P&L account debit. Advertisement, it is relating to sales now, P&L account debit. Sales return, deduct from sales in the trading account credit side. Direct wages, take it to the manufacturing account. Bad debts, if there is no provision for doubtful debts, then straight away this can be taken to the P&L account. If there are some provision for doubtful debts, then these are taken to the provision account. Next, power. Power, directly take it to the manufacturing account, or else if we have any adjustment, we do it accordingly. Interest paid. Interest paid is a finance charge, so it is taken to the P&L account. Discount allowed, P&L account debit. Next, sundry creditors, balance sheet liability side. Purchase returns deducted from purchases. See, earlier we have raw material plus 5 lakhs now, total 6.5 lakh minus purchase returns 5 lakh. Deduct. Capital, balance sheet liability. Bills payable, balance sheet liability. Long term loan, balance sheet liability side. Provision for doubtful debts account. Here we prepare simply provision for doubtful debts account. How much is the opening balance? 2000. Here we have debtors now. Sorry, bad debts now. Bad debts 4000 is transferred to the provision for doubtful debts account. We see how much provision is created. See, provision creation is different. Provision amount transferred to P&L account is different. Do remember this. Sales, trading account credit, bank overdraft, balance sheet liability side. Now observe, carriage inward, it is a direct expense relating to purchase of goods, manufacturing account debit side. Carriage outward, it is relating to sale of goods, P&L account debit. Commission paid, it is a charge on sales or commission, selling commission or whatever it may be, P&L account debit. Look at additional information. Stock of finished goods. Stock of finished goods it is. Which goods? Finished goods. Finished goods information is shown on the credit side. It is closing stock now. Closing stock now. So trading account credit. Again, balance sheet asset side. Next, a provision for doubtful debts is to be created. 5% on sundry debtors. 5% on sundry debtors. Debtors are how much? 40,000. 40,000 into 5% how much? 2,000. So here we show 2,000 rupees as closing provision, balance C by D. Means total amount we need to transfer to P&L account actually 4,000 plus 2,000. But already opening provision we are maintaining 2,000. So simply we transfer 4,000 to P&L account. This is our PDD account, provision for doubtful debts account. Next, depreciation on building 1000. Straight away they are giving depreciation. They are not giving percentage. You need not to calculate. Straight away they are giving depreciation 1000, P&L account debit. 3000 on plant and machinery. Don't forget, this is very important. Plant and machinery is used for manufacturing of goods, so that this 3000 is taken to the manufacturing account debit side. Next, accrued commission 12,500 is to be received for the year. Here it is commission paid, already taken to the P&L account debit side. It is accrued commission, means we have to receive commission, and this commission is taken to the P&L account credit side, again balance sheet asset side. Next, interest has accrued on investments 15,000. Investments, so it is income now, P&L account credit, again show it as asset in the balance sheet asset side. Salaries outstanding 2,000. Already how much salary is paid? 20,000 plus 2,000, total 22,000. Just a minute. Okay, fine. So 20,000 already salaries paid plus 2,000 rupees. Total 22,000 rupees salaries we show on the debit side of P&L account. 2,000 rupees liability on the asset side of balance sheet. Next one, prepaid interest. Prepaid interest. Already how much interest we have paid? Interest paid 7,000. Interest paid 7,000. Out of that 2,000 rupees is prepaid. Out of that 2,000 rupees is prepaid. Minus 2,000, remaining 5,000 rupees shown on the debit side of P&L account. 2,000 rupees asset, balance sheet asset side. Okay, next one. That's it. After completion of all these things, balance, first balance manufacturing account. The balance of manufacturing account is nothing but cost of goods produced, and that is taken to the trading account debit side. Again we balance trading account. There we get either gross profit or gross loss. That is taken to the P&L account. There we get net profit or net loss, and that is taken to the balance sheet. Then the balance sheet is total. This is the procedure we have to follow. Now look at the same type of problem. Same type of problem means, just now we have discussed one problem now. Just a minute. Problem number illustration 3. Look at manufacturing account illustration, manufacturing entities illustration 3. Same type of problem we have in our MTP1, manufacturing entities. MTP1 manufacturing entities. Observe, same type of problem. Same type of problem. 1.5 lakh, 1.5 lakh. Here just see how ICI plays game with the students now. Here you can see. Look at. Observe. Here raw material is given 21,000 now. But observe in MTP how much it is given? 2,10,000. Just they added 1 0. Here sundry creditors given 1.5 lakh na, but look at here how much given? 15,000. Just they have added 1 0. That's it. Here the total is 3,02,800 na. Here observe 30,28,000. Just they added 0. That's it. Observe carefully. In the adjustments also, this is how ICI plays mind game with the student. Just they will sometimes, if you get this type of problem na, it is a biggest advantage for us. Why? Because just they added 1 0, concept is same, items are same, and adjustments also same. Look at the adjustment here: 1,62,000, 181, 78. Here 16,200, 18,100, 78,000. Just adjustments are same, amounts are different. That's it. Okay, here also same: salaries and wages, rent. Only they have excluded here is provision. Only they have excluded here is provision. Look at salaries and wages, 900 there, 9,000 here, 2,000 there, 20,000 here. Rent same, 3/4 for factory, 1/4 to office. Lighting is same, 2/3 to factory and 1/3 to office. But only thing here they have given provision. Here they have given provision, but in that problem they excluded provision. That's it. Here everybody. Yes sir. Yes sir. That's it. Okay. Next one. Now previous attempts you can observe in the based on new syllabus, January, June 2024, September 2024 and January 2025. They did not ask any question on manufacturing entities. But they have asked, I think, they have asked a small question on manufacturing account, but not completely, just manufacturing account. Let me check. Yes. Small problem on manufacturing account. Observe. Already we have discussed this type of problem. Opening work in progress, closing work in progress, opening inventory of raw material, purchases, scrap value. Look at. Understood? 5 marks. But this time we may expect some 10 to 15 marks from the whole concept of manufacturing entity. Manufacturing account, trading account, profit and loss account and balance sheet. This is our manufacturing entity final accounts. Now after this we start our discussion with the accounts from incomplete records. Accounts from incomplete records. Observe. This we start in the evening session, students, not now. In the evening session we start this chapter. Yes. Accounts from incomplete records. This is another important, very important chapter. Because in the previous attempts they have given a problem from these incomplete records. Here sometimes ICI is giving choice between, that means ICI is taking choice between final accounts of sole proprietorship and accounts from incomplete records. Why sir? Why? Because these two chapters nature is same. These two chapters nature is same. Nature means what? Preparation of financial statements. In case of final accounts of sole proprietorship, they give you trial balance and additional information and you have to prepare final accounts. But in case of accounts from incomplete records, they give you incomplete information. You have to convert those information into complete information. You have to prepare a trading account, profit and loss account and balance sheet. Both chapters nature is same, final output is same, but the information which they give to solve the problem is different. Yes or no? Yes. I will show you the proofs. What is this, sir? Now look at, this is our September 2024 question paper. This is our September 2024 question paper. Here they have given, a question from non-manufacturing entity. 3A, non-manufacturing entity. Next, it is NPO. It is NPO. Yes. It is incomplete records. Look at incomplete records. They have given for 5 marks. 5 marks. That to internal choice. 15 marks final accounts problem. 5 marks incomplete problems. And NPO 10 marks. NPO 10 marks. Final accounts also here, I think 10 marks. No? Yeah, 10 marks. 10 plus 10 plus 5. 25. And next question paper you observe, this analysis is very, very important, students. This analysis is very, very important. This is NPO given for 12 marks. NPO given for 12 marks. Next, this is incomplete records given for 8 marks. Incomplete records given for 8 marks. 20 total. Now, which type of problem they have given? Look at, this is 5 marks manufacturing entity. Means almost he is asking 3 questions from these 3 chapters. But marks are different, jumbling. Marks are jumbling, observe carefully. But he is asking 3 questions from these 3 chapters. 25 marks. If you get one true or false, 27 marks. And I will show you one more question paper also. And this question paper is 12th January. January attempt. Observe carefully. Here matching concept is based on, okay, fine. It is non-manufacturing entity, 15 marks. Non-manufacturing entity, 15 marks. This is incomplete records. Statement of affairs. Incomplete records. How many marks? 5 marks. Incomplete records. 10 marks NPO. 10 marks NPO. What I want to convey is, these 3 chapters are very, very important, and you get damn sure question from these 3 chapters for 25 marks. 25 marks, sure. Here you can see, NPO 10 marks, na? 5 marks incomplete record, 15. 15 marks. Final accounts of non-manufacturing entity. 15 plus 15, 30. Bonus. Clear, everybody? Yes, sir. So, in the next class, again we have another session in the evening, 7 to 11, 4 hours. In these 4 hours, we try to complete accounts from incomplete records, plus NPO. Next, evening session itself, today evening session itself, we try to start partnership accounts, because 1 hour it takes incomplete records, 1 hour NPO, 1 hour or 1.5 hour NPO, very, very important, because NPO they are asking for 10 marks every time. So 1.5 hour NPO. Thereafter we take some break. After that we start partnership accounts. At least we try to complete 2 chapters from partnership accounts in the evening session, today's session. Tomorrow morning 10 to 12 again we have this session. Tomorrow morning session we try to complete partnership accounts, entire partnership accounts. Because admission, retirement, death, these 3 are similar but with little bit of slight modifications. And tomorrow evening session we try to complete company accounts. 4 hours na, entire company accounts we start tomorrow, we try to complete tomorrow evening. 7 to 11 session again we have. Tomorrow we try to complete this company accounts. Day after tomorrow what I will do is, I will try to answer all your doubts. Since morning to afternoon 1 o'clock. From morning 6 to afternoon 1 o'clock, I will try to answer all your doubts in our Telegram channel. Is it clear, students? Yes. So that is for this session. Hope you enjoyed this session, and this session helped you. I hope this session will help you to score at least 10 marks from the final accounts chapter. Right, students? So my strategy is to make you at least get to get 50 to 60 marks from this 2 days revision classes. I said already, accounting is a stepwise marking problem. You get a stepwise marking in the account subject. So at least to the extent possible, how much you can write, you write and come. Suppose this is the problem, non-manufacturing entity. At least you can write each item, you can take it to the trading or P&L or balance sheet now. Forget about adjustments. If you know the adjustments, you can do it. Otherwise, at least leave. So try to solve, try to attempt 100 marks question paper or at least 80 marks question paper. You try to attempt. You do whatever you do. Yes or no, to the extent possible, and come. Clear, everybody? Yes. So that's it for this session. We meet again in the evening session. Be there sharp by 7 o'clock. Till then, bye bye everyone.